folks, how you doing? So if we don't set up our financial products properly, and after death our dependents will end up going to a court to access the money. Okay, so this is the point of interest today. So let's find out more details. 1 second, let me use dark mode. Okay, so if your single holder account is having good amount of investment savings, then if the death happens, there will be a significant benefit loss for those term products. Okay, the reason is after death you are required to inform the bank about the death and do the account closure, and they take you forwards to the process of nomination and etc. But anyway, you have to inform the bank as soon as possible, and they will close the account. And when that happens, there is pre-closure happening to your term products. All these are term products, endowment plans, all the way to all these tax saving investments. And when the pre-closure happens, the penalty is very high, because all these financial companies given you interest, bonus, etc. all these years, and they will take away a lot of money from that. Okay, and this is a disaster you should avoid. So the solution is use or convert the single holder account to a joint account, and that gives you a lot of convenience even if we encounter a death. Okay, there will be uninterrupted operation, and all your long-term products, time products will not lose any benefits earned so far. Okay, so for a joint account you need one more person minimum, and you have to pick up someone trusted, the one you trust more than you, and definitely you have choices. Okay, now whether you're married or not. Now let's look at what are the joint account types. Okay, and before we go there, like I mentioned, joint account gives you not only convenience, it also gives you succession plan. Okay, so the other guy that you trusted will succeed after your death and take it forward. Now when it comes to the joint account feature, it's available to available to these financial providers, bankers, investment companies, insurance companies. They give you this joint account option. Okay, and let's look at the modes. Okay, modes is typically how it works, the different modes of joint accounts. From the bank products, you have 4 modes. The first one is either or survivor. If you choose this option when you open a banking product, then you are choosing one of your trusted partner, so you both are going and you are choosing this as part of the joint account setup. You can, by the way, you can convert a single holder account anytime to a joint, and vice versa also. So if you choose either or survivor as the joint account mode, what that means is the primary as well as secondary, the first person and as well as second person, can operate the account independently. Okay, and when the death happens, especially to the primary person, the secondary person will continue to operate the account, and he become the first person, and he gets full rights also, and he can later add another person. So this mode allow both person to operate the account independently. Now if you don't like that mode for any reason, The second one is former or survivor. So on this one, only the first person, the primary account holder, has full access, and he is only allowed to operate the account throughout. Okay, when he is no more, the second person, who is the survivor, get full access, and the account will continue to operate, and later he can add another person. Okay, and the third one, anyone or survivor, and this one is generally used when you have more than two account holders, like 3. In that case, this is pretty much same. Any holder can operate the account independently, and if one of the holder is no more, the other 2 will continue to operate the account, and they can even add another person. Okay, the last one is jointly, and this mode is the highly restricted one. Okay, this is the highly restricted one, where all the account holders are required to do any transaction. Okay, and this is generally used in a scenario where joint decisions are made. Okay, so these are the modes from the bank. Now what about mutual funds and demat accounts? They provide 2 modes. One is joint, the other one is either a survivor. So the joint mode is pretty much the same thing we discussed before. All the holders are required to do transactions or approvals. Either or survivor is pretty much the same thing that we discussed in banks. Now life insurance also gives you joint account mode, which is called joint. This is, say a husband purchased a life insurance, he can add his spouse as a joint account holder, okay, under a single policy, and if the death happens, okay, a payout is made to the other person, and the policy will continue on the second person. Okay, now the last one is you are taking a loan. Okay, they also give you a joint option, which is called co-borrowers. Okay, so what happens here is 2 or more people can apply for a loan together, and both are liable for the repayment. Okay, this is generally used for tax and ownership benefits. All right, so we saw how the joint works. Okay, and what are the benefits and the different modes. Section B, court order. Now you see, most of the people just go to the bank, open an account, or buy a new product, give their names, and it's mostly single owner setup. Okay, and the bank will insist them to provide a nominee, and that's it, you're done. So the problem with that approach is that if you're no more, and if there is nominee error or nominee is absent, then when you are gone, your dependents will go to the financial provider, for example bank, and they will say that you need a court order because there is nominee error, we are not able to verify you, or there is no nominee mentioned. In either case, they will tell you they cannot give you any access to money, you need a court order. So the court will look at the successors. Okay, the successors to the person who no more. It could be parents, spouse, children, sibling, etc. And the court will decide the percentage of share. Okay, it's a civil case and it's going to take time. You don't want to go in this route. Therefore, it is very, very important that if your financial products have enough money and it is for future needs and there is long-term time products, please use joint, and you have many modes there where you have complete control or you can share the control. Okay, so with that we are done here. These are disclaimers, please read. I hope today's discussion was some help to you. Okay, thank you for listening. I'll see you next time. You take care. All the best.